Hello everyone, welcome back to the channel Concepts of Commerce, your virtual learning platform for all the concepts relating to commerce subject. My name is Deepshikha Gandhi and आज के इस वीडियो में हम डिस्कस करने वाले हैं rules for different types of accounts in financial accounting which you will be using for passing journal entries in the books of accounts. So since we all know passing journal entries is the first step in preparation of financial statements, obviously after identification of financial transactions. So if there is a mistake in passing journal entries, that means it is going to create mistakes in preparation of balance sheet as well. So that is why it is of paramount importance that we should be following the rules very correctly and passing the correct journal entries so as to have correct statement of accounts. Before I start the video, if you have not subscribed to the channel, do subscribe to Concepts of Commerce so that be notified about the latest videos that I post and the quiz questions that I keep on posting on the channel. These questions, the MCQs that I keep on posting, will be of a great help to you all for your quick revisions of the basic concepts. Also, I have already posted in the channel the videos relating to the process of passing journal entry, wherein we discuss the steps of passing journal entries in journal book. I have already posted the video regarding accounting process, and numerous other videos are there relating to the topics of microeconomics, macroeconomics, management accounting, and many more. So if you are new to the channel, do subscribe and check out the videos. Now, first of all, personal account. The rule for personal account is debit the receiver and credit the giver. Let's understand the rule and its application with a few examples. Received rupees 10,000 from Ram. So Ram comes under personal account, and the rule for personal account is debit the receiver and credit the giver. So since here Ram is the giver, Ram account will be credited. So which account will be debited, I'm not taking as of now because that does not relate to personal account. That we will be taking in the miscellaneous transactions later in the video. So as for now, we know Ram will be credited here because Ram is the giver. Next is payment of salary to employee. So the employee salary account is the receiver here. So according to the rule of personal account, debit the receiver and credit the giver. So employee salary account is receiving the money here, so it will be debited. And we will be completing this transaction in this journal entry in the miscellaneous transactions later in the video. So please watch the video till the end. Next is real account. Rule for real account is debit what comes in and credit what goes out. Let's have a look at the examples and the usage of the rule. Purchased computer and paid by cash. So here computer comes under real account and cash also comes under real account. And the rule for real account is debit what comes in and credit what goes out. Here computer is coming into the organization, whereas cash is going out of the organization. So accordingly, according to the rule of real account, debit what comes in, credit what goes out. So the journal entry will be computer account debited to cash account. Sold goods and received amount in cash. So here we can see cash account is being affected and cash comes under real account, and what is happening to cash? It is coming into the business, and according to real account, debit what is coming into the business. So here cash account will be debited. Which account will be credited here? That we will see in the miscellaneous transaction later in the video. Next is nominal account. The rule for nominal account is debit all expenses and losses, credit all incomes and gains. Now let's have a look at a few examples and application of the rule. Paid wages in cash. So wage is an expense. That means it comes under nominal account for the business. So wages is an expense here because it is being paid by the business organization. So according to the rule of nominal account, debit all expenses or losses, credit all incomes and gains. So here wages is an expense, so it will be debited. Received interest in cash. So here interest comes under nominal account because it is an income, because it is being received by the company. So interest is being received and is an income. So according to the rule of nominal account, it will be credited. So here we can credit the interest account. Purchases made with cash. That means we are making the purchase and we are paying by cash. So that means purchase and cash account are here being affected. Purchase being an comes under nominal account, and the rule for nominal account is debit all expenses and losses. So it is an expense, so purchase account will be debited. Cash relates to real account, and the rule for real account is debit what comes in, credit what goes out, and cash here is going out of the company. So the entry will be purchases account debited to cash account. Cash withdrawal for personal use. In financial accounting, we term it as drawings. Whenever cash or even any good is being withdrawn from the business by the proprietor, it is termed as drawings in financial accounting. So here cash is going out of the business and cash relates to real account. And according to the rule, debit what comes in, credit what goes out, cash account will be credited here. And drawings comes under personal account because that is the receiver, and according to personal account, receiver is always debited. So the journal entry will be drawings account debited to cash account. Received cash from Ram. So here Ram is the giver and Ram comes under personal account, and according to the rule, the giver will be credited. Cash comes under real account and cash is coming into the business, and according to the rule it will be debited. So the journal entry will be cash account debited to Ram account. Payment of salary to employee. So the employee salary account is the receiver here. According to personal account, it will be debited. And when we are paying the salary, and we are assuming here that we are paying the salary in cash. So cash is going out of the business, hence cash will be credited. So the entry becomes employee salary account debited to cash account. Goods sold for cash. So here we can see two accounts are being impacted, that is sales account and cash account. So sales is an income for the company and it comes under nominal account. According to the rule of nominal account, we need to credit all the incomes and gains. So sales account will be credited here. Second account being impacted, that is cash, is coming into the business. And by now we know it comes under real account, and according to the rule of real account, it needs to be debited. So cash account debited to sales account becomes the journal entry for this particular transaction.
That was all for today. I hope you liked the video. If you did, please leave a comment in the comment section. Keep sharing the videos with your friends. Stay tuned in for the next video. Till then, keep learning, keep growing. Have a nice day.